Good afternoon, traders. Welcome to TradeSetup and a live stream. Thanks for taking the time to join us today. It is the 23rd of January 2017, so it's getting a bit long in January now. So everyone's well and truly back from holidays, I'm saying, and we're full back into it. So start of another week. We've got Australia Day on Thursday. So I think the market's closed on Thursday in the ASX, or the ASX. I was going to say the SFE. So they might be closed and then reopen around 5 o'clock for the US night session anyway. Yeah, I hope we had a good weekend. I hope it wasn't too busy. We had time to just sit back and relax, go over a few things. I always like to sit back, relax, go over a few trades, and just look at what the market's doing. Watch a bit on. G'day Nathan, how are you, mate? Look a bit on YouTube, just to bits and pieces, just to keep you busy. So I actually enjoy that, just relaxing on the weekend, looking at that stuff. It's a bit warped, but I do love the charting side of the thing. So always willing to learn something new if I can find it. Um, again, just going over what you can see on screen there. For anyone that's new, either join us on Twitter, Facebook, or subscribe to us on YouTube channel, and you get a pop-up from YouTube itself, as well as the app that we're going live. Today, before I get going, the general advice won't remember down there. Take some time to read it. We don't do personal advice. We don't take into account anyone's positions or anything like that. It's just our own bias to the market and what we're looking at, and what we see as favourable moves or ready to go, and where we'd place our some trades. So it's just all our own opinion. Anyway, without further ado, we'll get into the markets. What we're going to look at today, and again on Thursday, we're just going to take a look at what's on our watch list. Bits and pieces that we're going to go through, why we like it. So we've actually entitled the stream today. There's not going to be a video as such. What I'm just going to do, we've entitled that stream, obviously, Finding Diamonds in the Rough and Building Your Watch List. So I just want to go through why particular shares and things that are coming onto our watch list and why we like them. And why we think there's got potential going forward in the near term rather than long term. Okay, so there could be some that look really good from a fundamental perspective. The chart's looking okay, but they may take a lot longer time for actually to come to a spot where we're happy to jump in. So there's pretty much, we've got a whole list that we go through from day to day, look at some stocks. Some pretty much goes to our watch list. So we like to get together a little watch list of what we think is actually going to move sooner rather than later, and what's showing some really good signs. It's basically in the zone. We discussed it a while ago too. I think we had a stream regarding that, in the zone. So we're just looking for stocks that are in the area rather than extended and just sitting around waiting for a while, or waiting for a pullback on a weekly chart, which could take a long time. We're looking for something that's actually closer rather than further to coming towards fruition, I guess, and really in that sweet spot for a trade. Before I get into it, we're going over the markets. The US was it Trump's inauguration on Friday? I don't know if any of you have seen. I did see it on Facebook somewhere. Someone sent it through, or on LinkedIn. His speech, which was, I don't know if anyone knows Batman and Bane. Go through and watch that speech from Bane. It's actually quite funny how similar they are. I know he's been not caught out as such, but copying a few of their speeches, just been sort of plagiarized a bit. But it's quite funny, some of his his speech, and they had comparative to Bane out of Batman. I don't know if it's the Dark Knight, but have a quick look at that. It's quite funny. Um, it didn't cause any major issues in the US overnight. Oh, sorry, on Friday night session. I think the market opened stronger and then just drifted off during his speech um, towards the end of session to finish. Did finish up, but not a lot, not a lot really. And it is a lot of people just sort of sitting around waiting for action. You know, sort of in a hold and a wait and see type of framework or mindset at the moment. I think the market, and it's what we've discussed over the last few days. He's got to start implementing things. It's enough to talk about it, but it's got to start implementing and warrant this market being where it is at the moment. And if it happens later rather than sooner, I think this market will start to drift lower. That people are going to start to get a bit edgy. What's going to keep it going? There's a few factors that could tip it over rather than keep kicking it higher. So we'll see how it goes. The US dollar was a little bit weaker. I think we had the other currencies. Gold kicked up, and gold's up again today. We'll take a look at that in a second. Our market's opened up like we expected, opened up around 20 points and opened up around 21. So we got that, nailed that. But the problem is it's sold off quite heavily, and it's down around, what are we at the moment? Down around 20 points. Yeah, 19.8, 20 points. So the ASX is open positive after a good little pop up into the close on Friday night, and then pretty much capitulated from there, sold off, and you can see that on that chart there on the ASX. So we've got a key level at the moment. We were looking at that 57.20 25 zone just up here as a key level, holding that trend down, and it was just picking up into the close. You can see that. So that candle there to close at around 56.77 thereabouts, and did pop up, hit up at 56.96, so just a touch under 5700, and then just sold after that. So it was a bit of a washout to the top side. So that anchor now is we're bringing it down to really, so just a touch under 57, so 56.95, we'll call it. That anchor for that down move there. I mean, that could easily just back and fill a bit, make some minor high lows, higher highs, and just sort of edge its way higher. Could just push back up to 56, 53. It may just be a major longer term washout of this 56.50 zone. We'll have to see how it plays out. It is extended to the downside. Look on the ASX, so just be careful. This is a 30-minute time frame, don't forget, so it may be a touch different on the daily. Let's actually just click it over to a daily just to see where it is. Anyone else got some views on the ASX? We discussed it previously. It's edging lower. One day down, a sort of slight day up, and a bit of a pause, and then a couple of days down, another pause to a little green candle on the daily basis. And then it's just been grinding lower rather than just capitulating, having a couple of big days and just going bang. It's just edging lower. And that's not bad price action for what we're going to see. Okay, look, it is stretched on the daily as well. So remember that half an hour it stretched to the downside, down 20. It could just be struggling, but we'll see. I mean, it could just hold down at these lows, extended. Price could still work its way low. We're starting to come into sort of a zone around that 55.80 to 5600. Not far off from where we are. And where are we? About 35 points off from where we are at the moment. So it could grind a bit lower the next few days and then start bouncing. But either that, we get a bit of, and then what we'd be looking for, obviously, we've spoken about that, lower high. If we get that grind lower, it pops back up a couple of good days and then just stalls short of this high, short of 58.25, 26. And we start looking like we're going to build that lower high on a major basis. Then we'd expect a lower pullback, a lower correction. Potentially taking out this 5,500, or we don't know where it's going to go, but the current leg up is, if we just draw that in, it's from here, 5,500. So that's the current leg up that we're contracting at the moment. So we just have to really see how far it's contracting, what happens from here. Does that make sense? Let's just look at a few of these currencies, the Aussie, the Euro, and the Pound, and we'll look at gold also. So just quickly, the Aussie's continuing that move higher. Remember, we were speaking about it, a bit of a breakout of this move here. Picked up. So we're looking for a breakout there. It's pulled back. We're sort of really holding this major trend higher. I don't see anything clear just off this daily. Oh, sorry, it's an hourly chart here. Anything too clear at the moment? I mean, if we hold this, we could just have a bit of contraction, and then really sort of do this action and then kick off again. And again, it's just dependent on the US and what the US does. So that would be interesting to say at least. So don't forget, we've still got reporting in the US, which will move the market around. I think if they don't, like we said, if we don't, they come out well above expectations. I think it's the market's just going to start seeing a bit of profit taking, but we'll just wait and see. Plan ahead, I'd say. Plan for the scenarios if this market just starts capitulating. So not this one as such, but the ASX capitulating a bit more. Then just plan ahead just to see what you're going to do. Are you going to hold? Where do we see this going? What do we expect to happen? If it does bounce, we get that lower high. What am I going to do? Am I going to exit some positions? Because that's, don't forget, we always get a lower high. Really does imply, just draw it. So you get this move up, push up, then you start getting a bit of contraction. So that's what we expect, and then we start building back up and building that lower high. Oh, that's a bit. So if that makes sense, a lower high is it's more of a major. You get a little contraction lower, still holding that anchor, which we are, and the anchor's way down at 50-50, don't forget. So we contracted some of that leg up, push back up. So this, if there's a strong market, should have taken out that high, continued, but we sort of, it wasn't too strong a move up either. It built that lower high, major lower high, and then it starts to roll over. Then what are you going to do? All right, so just have that plan ahead. All right, let me get sidetracked again. Euro. Yeah, so the Aussies really, if this starts breaking down here, and we've got a key level, more or less, if we start breaking that zone through there, which is, just do that a bit nicer, is that 75.20. I want to see it hold up this trend here, hold up, build it, a couple of higher lows, and then you'd expect it to pop up and then look for an entry off a small, maybe a 30-minute chart, or even stick to the hourly, just so you can, where you're going to put your risk. If we get that type of contraction, great. If we don't, if we start busting through here and testing this sort of 75.20 zone in the next 3 hours, don't forget it's extended up here and we've failed to get through this high. Doesn't mean too much. You can easily come back down to 50% on the stochastics, showing come out of extended, come out of overbought region, still hold up, and that's what we're expecting. And that gives it the emphasis to kick on. But again, we'll see how that plays out. Euro just starting to kick high, which is nice. That's a 4-hourly chart. Remember, the key level's way up here. We've got the key level up at 108.65 to 70. So now that's that current leg down, and we've contracted. We've retested this low a few times, 103.57. Retested that a couple of times, even a little washout before contracting higher. But this type of price action, don't forget, it's similar to this, and then we may get these shocks to the downside. So that's what we're sort of watching for. But again, we want that lower high to build, failed continuation higher, which we always like, and then just try to work an entry, potential entry down to at least test that low 103.63 or lower or through that. But it is getting to that extended zone on this move up, and it's not up near those highs at 108.65. So it's showing the signs, but it's got to play out first. We still need that lower high, which I always like to see. Pound has held that level. So it's just below 135. Retested, had that move down, and then we worked our way back up to 127.40, and then retested those lows, and just starting to come off the lows now. That's a daily. So on the daily basis, the key level is just at the moment is this pretty much where we're. Oh, let's get rid of that. Pretty much where we're at the moment. Okay. Which is that 124.50 zone. So it is extended into that zone, but if you just drop it down some charts, it's looking like it's going to pop up through. We'll have to wait and see if it pops through and there's a bit of a washout. Then if we get that lower high and it retests that, I mean, a lot of the times it can push through by a few pips, take out some stops, roll over, push back up and retest to the dot, to the point, to the pip, I guess you could say, and then roll over from there and then start looking for an entry. If it just goes on, builds a high low, goes quite strong, pulls back another high low and then goes, then we'll probably have to just call it a day because it is a major double bottom in that case. The major double bottoms confirm really when it gets through that 124. Well, what do we say, 30, 25, that zone up here. All right. So we're still, I mean, still biased down on this at the moment. And don't forget, we are extended up there. We can get that pop. If we get this type of price action, see that lower high there? That would be nice to see. Um, but yeah, I mean, that comes down to that. What is it? The UK's hard exit and all that sort of rhetoric. We'll see how that plays out. Now we've got, whoop, get rid of that. Gold. Take a look at gold. Gold still, this is a daily chart too. So we've got that leg. Just drill it back. We've spoke about this on Friday in the stream. We've had that push down. The key level, once we broke through that 1075 support, so we pushed down to 1075, pushed up, built a lower high in comparison to these ones here at 112.30, and then we built that lower high at 1180, 1190. Pushed down through that support zone. But you can see it spent a lot of time there. It just wasn't convincing, and it held up just below there, taking out some low, and then we worked all the way back up. So we produced a leg. As soon as we took out that anchor at I'm used to saying the currencies now, 1188, 1190. As soon as we took that out, you can see we pulled back, retested down towards it, and then started working our way higher. Another retest sort of down towards it as well, back here, and then kicked on higher to that 1379. So that is the current leg up off that major support. So what we're just, what we're seeing at the moment, what we could potentially be seeing is that leg down is just contraction of this major leg higher. Okay, so all in context of what's going on, and then from there we want to see that's had a good leg up from, good move up higher recently. So just remembering, is this going to be contraction, or is this just potentially the start of a new leg lower? Does that make sense? A major rollover and leg lower. So we don't know at this stage. It's either got to take out that 1126, roll over from here, take it out and test down here and probably bang straight through it in that case. Or are we going to start seeing a bit of contraction here between potentially 1220 and these lows here at 1126? So that's something we really want to start focusing on for gold. Anyway, if you're a gold bug, get into the hourly chart. Okay, that's that low just in here. So yeah, it's showing some good signs. We have pushed higher. Yeah, little break low. So we're holding the high low. So this trend is still up really. If we do get up through that level 1218, extended on that chart, we extended on the daily up here, extended on the hourly as well up here. So we might just pop out through the top, bit of a washout, those highs, take out a few people. Put a few more longs into, there might be some stops up here for long positions. So if it breaks there, longer term, I'll stop below here, could wash them out, roll over, build that lower high, then go down. We'll see how that plays out though. It does it time and time again, so it's just something to take. I wouldn't ever buy on a breakout through there anyway. That's not the way I trade because that's too big a stop. I'd rather see this type of price action holding from a potential major. This area here is prime for a gold trade in this respect anyway. Looking at least target up towards 1217, but if you get that breakout, great. If you don't, you got some profit in behind up your sleeve. Anyway, any questions just on those? Anyone still looking at the currencies before we start looking at a few stocks now? See where we are. Any trading there, Nathan? You jumping in and out a few there? Maybe just tick down a few more points, another 5 or so. A couple of good ones. We've got IFN that's kicked off nice for us. We bought that. Oh, can't remember now. 95, I think it was. It's pushed up through $1, which is good. Expecting that to target now that high. That high from back here, high 106. All right, no questions by the looks of it. All right, let's jump into it then, guys. We're just going to look at what I wanted to go through rather than set up the video. One reason why I didn't do it is more or less because we had that weekend, got sidetracked a few times, and then this morning was a bit busy, so didn't have an opportunity to put together a video as such. But what we might keep it to is just discussing the markets on the Monday and Thursday, and do videos Tuesday, Wednesday, and Friday. There's just short presentations on different things. So this is time for you to come in and just discuss what you're looking at, charts. It doesn't have to be stocks as such. It can be anything. All right. Aussie 200 short. That'll could work. I guess you did it right on that one. So it doesn't have to be just straight stocks, currencies. Look at a bit of anything really. We just want to mix it around because everything's interlinked at the moment. We know that the US dollars is a key at the moment. It's pushing around gold, so which is in turn pushing around Currencies are pushing around. Let me start again. The US is pushing around the currencies, which is the Aussie and gold. So all they're pushing around their stocks. So they're all sort of interlinked. Having an idea of what's happening globally is always good as a bit of a backdrop to, for your trading. And there is times, of course, if you've got a nice little stock to market, it's not doing too much, like IFN, it's grinding higher. It's up 2% on a down day. So some of them go really well, but then when you just want to be wary of what's happening for an overall beating, I guess. If the market's really starting to show some serious weakness, then how do you attack it? Because once things start going hard to the downside, they tend to all go with it. All right. Now, portfolios. What we like to do, in essence, for our portfolios, what we're looking for is not so much portfolio, but what we're willing to hold. Okay. You can reduce your risk by just getting a few. If you've got a few hot areas, so we look at sectors, obviously, go through the different. We'll just do that. Quickly look at it now. The different sectors. If I can get that. So just flicking through to see what is showing good signs of some strong movement. Generally picking the weeklies. What's starting to lift off? I mean, this one's, for example, was it consumer staples? It looked like it's obviously got some support there. It's broken out some of these lower highs, popped out, potentially built that higher low, which in conjunction this move down. So that's starting to come out the other side, and that could easily start working its way up. So drilling down to that section, that sector, and starting to pick some that look good structurally on each individual stocks, and picking the cherry picking which ones look really good. So that's what we want to do, just flicking through, start off the sectors. Something looks terrible, looks like it's going to roll over, maybe just steer clear of that sector. Unless, of course, something looks ideal. I mean, if there is a stock there that looks ideal in a sector that doesn't look so great, there's no reason why you can't trade it. It just means that maybe you want to keep that. If you're looking at weighting your portfolio, I would just not weight too heavily in the sector that's no good. I mean, if it's an ideal stock, maybe chuck one in too, however you want to attack it. But start to, I mean, the way I like to do is you'll see the ones that are running anyway. The ones that are running are generally out of a strong sector anyway, but it's good just to have an idea of what, treating this the same way as you treat your stocks. I like to look at a setup, wait for it to start building, but always keep an eye on these. Have a list of stocks that they're not really on the watch list just yet. They're not primed. They're not in that sweet spot, but they're showing some good signs. So same thing with the sectors. That makes sense to you guys? So just flicking through, you can see that financial starting to kick up. Information technology, I don't know about this one, to be honest. It's not showing any. You're starting to butt up against that 850. I mean, if we build that lower high and roll over, might have a bit of a correction low. We'll have to see. It is from that move down. It is working its way high, and that's way back from 2003. Just have to see how that goes. What else we got? XGD's gold. We'll keep an eye on that one because that's had a good strong run up, good correction lower, and it's potentially building a higher low. You can see it was extended down to before the start of this year, and it could just have come out of that down extended zone, or however you want to call it, and then rolling over from here and attacking down to 2000, right down to those lows. But we'll see how that goes. I think it's showing potential for us anyway. Now, so I was saying, so going into the sectors, so from there, what I'd like to do is just pick out some stocks that I like, obviously weighting towards the good sectors. If you've got 10, we tend to allocate 10 positions. That's the way I like to work things. I don't like to go over too many. I think 10's enough to give you some good returns, good performance. I don't like to be too heavy into one area because if it does turn, if something happens, say US dollar based or whatever, I don't want to be too heavy into one sector. For instance, if it does turn, then you're going to get caned across the board. Generally, I'd rather have, if they are, because generally if you've got 10 in the same sector, they're not all going to be prime positions. You just tend to be weighting towards, or maybe I would have a predetermined bias towards that sector, and it's hard to admit that I'm wrong. I just think I'm going to do really well. I want to keep myself neutral, like I've mentioned before, and just look for prime setups, which I can easily analyze my risk on it, and then wait for the setup and then go. If it doesn't set up, so be it. I'll go down to the next one on the list. All right. So in saying all that, we'll go through, what do I mean by something that's come on the portfolio? So if we've got an uptrend, And we're talking a major. Say this is your week is your, say it's based on a weekly chart. You got your higher lows, and then what we see, the last, it could have got extended in that last move. So if I'm starting to look at something, okay, the weekly's up, and I can see my anchor is down at this higher low here. So that's the key level for me, right? I wouldn't necessarily, at that stage, I wouldn't necessarily have it on the watch list as such, because, I don't know. There's no, from a technical point of view, who's to say what's going to happen here? It could capitulate straight down through there. We don't know. What I'd like to see from here, and we've said it before, is the type of price action if it's contracting. And a lot of the times, if it does blow off quite hard, and then you get this type of price action, and it could be on a daily, but even on a weekly, that's not strengthening selling. It is buyers still happy to step in. They're buying some hold, but they're holding it above that anchor level. All right, so then that would be, for me, that would be something that's potentially on the I'll put on the radar, put on my watch list, because I think, well, 1, 2, 3, who's to say it's just going to keep going? It looks strong. Maybe the fundamental basis behind that stock is looking great. I'm happy to have a crack at it, and it's coming into that zone, and we know the stochastics have gone from, say, at this stage here, we're sort of around here at overbought, extended. So a bit of steam needs to be taken out of that market, of that leg. It's just contracting that leg up, don't forget. Still holding the weekly trend until it's broken through the anchor. Like we've mentioned before, anchors for me are important. For everyone, it's sort of that swing level. If it breaks through there, there's something wrong. You've got to question the premise for the actual trade, or the premise for the trend higher. Is it starting to wear thin? Is it starting, there's volume coming out of the market when it gets extended up at these levels. But if volume comes back in with this type of price action, and then you're going from overextended to potentially on the downside, oversold, that's my word, extended to the downside, but we're still holding up above that anchor, then that's definitely going to be on the watch list. And then, of course, we've seen it before, we look for potential early signs. Breaks up through here, we just, okay, that from there, that downtrend is starting to break. It's showing early signs. We still don't know, because it could easily just go up, pop up, wash out, and straight back down below this low. It could do this, and then keep working its way down and break. Just bring in some buyers, wash them back out towards when it moves down. So we want to see from there is just signs of contraction. Okay, and then we're looking for that extended leg high. So what we're trying to do with our things coming on the watch list is not so much just going, oh, let's just jump in and buy it here. I want to see this, because what I'm trying to do is build my watch list with stocks that are primed, that are coming into that sweet spot. Not just 10, but there could be 15 to 20 on there that I like. I don't want to waste my money buying something here when it does this for the next 2 months, when I could have got something that's just, something else. Say I've got 9 stocks already. My last one, for instance, I don't want to jump into something like that. I want to pick it when it's primed, when we've seen this type of setup, and then go down to the daily for that setup and try to get, I don't want to sit there wasting time sitting into a stock which is doing nothing. I want to get it for that extension higher, for the potential of that next leg up to break through these highs. So that's ideally why we're looking at stuff coming onto the watch list. And does that make a lot of sense there, guys? Something that's holding legs, holding its leg up. You just got to put it in the context of what's happening. If I get that type of context, then I'm happy as Larry. You could be looking at a daily or a weekly. There could be different scenarios, but ideally, I like to see a nice, strong weekly trend. And then just remembering, this is the current leg up, and we're getting contraction. I want to see that contraction. So I'm ideally looking for just this, if this makes sense. So that contraction there is just bringing in some buyers potentially, holding up above and then kicking on. But if that's on a weekly, I would always popping it down a level. So if this is my anchor chart and I'm looking for that next weekly leg higher, I'm looking to my daily chart for the entry setup. So I'm looking at price action potentially like that on a daily chart. It just makes it clearer. You can refine your entries by going down a time frame too. So let's look at some stocks. These are a few that we've been toying with. Now this is the weekly chart of, actually let's just get rid of all this stuff. Oh, okay. And we'll just draw that up again. Okay, so what I've defined here, that's pretty clear. It's in an uptrend. Say at this stage, far left hand side, it's had a good strong uptrend. The key level anchor was down here, and that's 117. Had a push up, pull back, made that higher low. It was around this zone. say 130, had another push up, had a deep correction all the way back, pretty much down to that anchor level. So I've defined that as my anchor level because once it gets through that top, that's a confirmed anchor, which it did way over here. It's worked its way up, washed out those highs, and it's pulled back. So we don't know from here. That anchor is still the key on this weekly chart. I mean, forget all this top price action until it gets through there. I mean, if this holds here as a double top and rolls over, and we take out there, then the weekly trend's over, and it just comes straight back off. But at the moment, on a weekly basis, we've built this higher low is a key for me. What stock is this? This is that's a very good question, Paul. SDG. I always forget the name. SDG. It is Sunland Group, which has done bugger all volume today, but just as an example of why it would be on a watch list. It's probably not one for you there, Paul. It's very small, but I think when it gets going, the volume starts coming into it. Why we like it, you can see that's the key level. So we've got, the only thing for me is it's getting a bit extended up towards this these highs. What was that, around 171? Actually, that can extend it out, can't I? All right, so you can see price has pushed up. We've made that high. We've contracted lower, made lower lows, lower highs, all the way back in. We've headed down and tested that anchor level on the weekly basis, and now we've pushed up off it. We built, which is the key, is this higher low. So for me, that's on my radar. I want to see some steam coming out of it because I do realise that it's up at overbought territory. It's getting a bit stretched up here. So I would love to see it pop up and then work its way back in. My mouse is getting a bit funny here. I'd love to see this type of price action work its way back in because we've got some room to move and then start popping up and building that major high low. All right, so this is the type of price action ideally I'd like to see because I know it could easily at this stage, because it's getting stretched, it could pop through there. Now, if it pops through, washes out, I'm looking for more of a washout because it's not coming from overbought. It's not in oversold territory, it's in overbought. It's extended this little move higher. So I want some steam to come out of it ideally before I start looking at this. But for me, that type of price structure on a weekly basis as well and truly makes it, one for the radar. That makes sense there. So you can see it even on the daily up at these levels at that 170 level. It's a bit overcooked up there. No, for me, it hasn't broken out. Just we'll go back to that weekly. Which type of level, where exactly you're looking at, Paul? For me, this key level. So don't forget, we've got an anchor for this leg up. So the major anchor is this 132, which produced, it's a bit higgledy-piggledy, this move up, but that was still holding. It's pushed up, pulled back, made a higher low, pushed up. We're just talking this leg here. So that leg there, it's pushed up and it's washed out this major high. Okay, so now that's the anchor. It's produced that leg and we're just contracting this leg here. Until we break through that anchor, it's still in play. But don't forget when it's going down as well. That's a very good point, Paul. When it's heading south too, you still have anchors, and this is why this is this key level. You can see it's gone down, made a lower high. More sellers have come in, pushed it down, made a lower low. This is just with context of this leg down. Let's just change that color. Ooh, do pink. I like pink. Does that make sense? So we still have an anchor for that leg. Every leg up, down, or sideways has an anchor, but you've just got to have it in context to what's happening in the overall market. So in context of this weekly, this is not a seller's market. This is really just contraction of that weekly trend. And I'm just looking to see where that contraction, is it going to abate or is this going to roll over? What's going to happen? I'm trying to build my plan. But that is at the stage where it's well and truly on my radar, what we've discussed just previously. But it has that, we're just going through before, popped up, lower low, popped up, and it's worked all the way down to here. And that's just that lot. And so here's the anchor at 170 for this leg down. Once that breaks, which we haven't done just yet, then that leg's probably finished and we are starting to hold up and we're starting to turn around from a downwards market on a daily basis, or a contraction market on a weekly, to actually heading for a potential new leg higher. So this is, for me, is that key 170. Once it breaks up there, we get this type of price action. that contraction's potentially finished. We've got confirmation of that higher low holding, and that higher low could be the start of a new leg up, potentially right up through what 209, 210. Which spike just here? Is that the spike you're talking about? Or way back here at 210? We call it an anchor there, Arthur. It's like a swing level because you got to. I guess there's a fair bit of psychology just to think behind it. We've done streams on it before, but this anchor is where it's coming down. Say at this stage, if we go all the way back to here, when we say anchor, it's your swing level. It swings down, high lows. That's the Dow theory. Oh, bugger! I didn't realise that they weren't showing very well. Let's just give you that. Is that a bit better there, Paul? It probably makes it a fair bit easier. Just pick out what sort of level you're talking about, whether it's up at 210 or that spike. When we talk about anchor, yep. When we talk about anchors, it's more the psychology level of what if you're got in here. All right, are you going to be feeling pain or are you going to be feeling euphoria or what's going to happen? Because you know that when people buy there, where's probably an obvious place to put a stop is below that low. It's below this one here because that's a swing level which swung. It's still holding the trend up like we define it with the MAs. The trend's higher. We're looking for a pullback to buy into. We got the pullback, started holding some levels, and it's kicked up higher. So to me, that's an anchor level. So I know that when we get down there, we're going to get a bit of action. Whether it's going to hold up or it's going to start spiking through. So I know if it spikes through that level, there's potentially people who have held it at different levels from way down here as well may have just, okay, raised my stop below this low, below 130. If I get tagged, I'm locked in that profit, but it gives me a chance to see if this thing can keep moving. So there's going to be something packed in there, whether it's people who have just bought it here or people who have bought it way down here. It pulls back, tests down towards there. So there's a few people who have just bought it in maybe this, have been in profit. Potentially, if they're still holding it, they come all the way back down and they're going, oh, look, I'm feeling a bit nervous now, but it's still, I've got my stop below this low, because that's a key point. But it's somewhere where we expect not so much arbitrary, but we expect to see action reaction. Okay, and if that's broken, it breaks down, and we could easily push back up, and it could suck in buys again. But we know if we get that lower high, then we expect that deeper correction. So it's based on a few premises. But really, when we say anchor, it's your swing level, I guess people would say. And what's happening on that. What's going to happen there if the market gets down there? There's going to be a few people under pressure. Does that make a bit of sense there, Arthur? Does that make sense to everyone? Because we're all the same. Well, if you're a technical trader, especially if fundamental, I don't know how they, to be honest, you buy when it's undervalued and sell when it's overvalued. I don't know how you manage a position, whether it's managed by pure fundamentals. But the way any sort of technical trader, that there's key levels, and this is how we organize it. We organize it within regards to structure, like we had, yeah. So that's so at the moment when we had that move down, if you bought it around here at this stage, or even if you bought it under here, and if you bought it here, my stop would ideally be placed behind there, and I've been stopped out somewhere potentially here, or even just this move down, and I've given up that. But then I might have a tight trade. Yeah, it just depends. We have no idea how they're running it, but if you're bought on a weekly basis from way down, about 90 cents, say, and you're holding it, your stop's essentially probably about here. Well, you'd think so, below 130. We've had that leg up. You're still not stopped out. It's pushed all the way back down. You're looking at it potentially going, look, I've given up this profit, but it hasn't broken my rules. I mean, if I was holding this on a weekly basis, I'd still be happy to hold it under here because I don't know, especially when we get this higher low. Now, if we break up here, I'm looking for a potential, at least a retest of these highs, potentially a move straight up through 210 and another leg up on a weekly basis. Then I'm still only move my stop a bit higher, but that's another reason why it's good to have half positions and manage it that way. Through September, very hard to read the months. September. Yeah, no, that's true. back here, yeah, look, it's broken up, that's for sure. But that could easily break up. I'm just trying to explain it. Is that I'm guessing, Paul, that's the high, that's the break up, that's an extension up that you're talking about? Yeah, beautiful. All right, now we're getting there. So that it is definitely pushed up higher, but it hasn't. This is what I've defined personally as a key level, 171, because we've had that little leg down. If it pushes up and then it's pulled back from that level, so it's obviously, it's right. It is a confirmed level now because it's stopped there, rolled over. Um, this high low is more. I mean, I wouldn't buy it on a breakthrough there because we've extended up there. I want to see. I could have been a buy in essence through. Well, that's not a very good. Could have been a buy through here, preempting a move up through that 170, but that to me, it's an initial sign of it breaking up, but it's nothing. Let's actually just draw this. It's not hard and fast. Yeah, and that's a bit hard to draw a trend line down, across those tops because it's actually holding up off that anchor level anyway. So you're right, it has kicked up through there, but it could easily if we get at this stage, I mean, even from here, it hasn't broken up through there. It could roll over, make lower highs, and be a major correction lower, and then really start attacking these 133. You've got to just define your key levels, I guess, your swing levels from a technical perspective. I mean, if I bought it here and this pushed up, which I've done, oh geez, I can show you a stock that I've actually done it on. Bought it. I didn't buy it off a technical reason. It was more just because it sounded good, and we've had a good story about it, and it's rolled over since. Yeah, getting poleaxed on it, got poleaxed on it because it just didn't set up. I didn't get any break of anchor. I bought it too early, and then it rolled over. It held. It looked good at that stage. It had a good solid move up, but then it just started edging and grinding lower, and it just kept going down and down and down and down. So because it didn't break. It was just another area where people think, oh, if it pulls back up here, I'm long. I don't like that. I want to get out, and they start selling it, and then you get a few more people. Potentially, it makes a lower high, and that's what we're looking for, lower highs. Um, and they want to get out as well. So it starts just building this momentum of sellers coming in for different reasons. People who are probably early sellers, and then you get those late sellers. Look, this is just not looking good. I'm just getting a bit nervous. I'm not saying that's going down, but that's sort of the theory or the psychology behind these levels holding and producing. It gets up here. There's a sell level up there. Short, we don't know. All right, does that make a bit of sense there? I guess I got sidetracked there, but what I'm trying to say is that for me is early warning signs of moving high, but I just need that final break up through. You can buy it on a break up through here. Your stop would have to be down below that high low at 150, 149. All right, let's get on to another one and see if we can see maybe some examples. This is one I've just had a look at today, AMA. I think we sent out an alert on it just before, just so I can get that chart up there. Yep, no, that's exactly right there, Arthur. I mean, I'm just trying to, I guess, explain pretty much what I look at and what I look for. But I don't know where anyone else likes to get in. I like to see certain patterns, but I also like to be able to see a certain pattern so I can define my risk and have a tight risk. And I'm trying to get in, for me, so in this one, it's contracted low and we built a higher low here. I'm probably happy because, let's just draw that up. Probably happy on this one. Look, that's ideally a nice setup towards, well, that is, if I do this exactly to a T, this type of price action here is set up nicely. You could have took an entry in here, could have took an entry here, but it's contracted lower of that move up. Yeah, so that's your move up. That's just contracting, still holding. Okay, it hasn't broken down, and that type of price action I like. So it's all got to do with your own risk. Some people might want confirmation with a breakthrough here. Buying a stop there. That for me, you have to. I would think you'd have to have your exit if it right down here. I like to run my exit tight and not give up too much but potentially we're both getting in on the same leg higher. I might be getting in a bit early, running that high there, but to me, and what I've looked at in the past and my analysis, back testing, whatever you want to say, to me, getting in here is the same as getting here because we're looking for that leg, that extension higher. So a lot of times this type of higher low price action, a break of this downtrend, which is showing signs of breaking out of contraction. When you break out of contraction, it doesn't just stop dead. Something's going to happen. And then I could, because I get that higher low, I could easily have my risk. So that risk there is about 3 times, probably it's about 3 times less than that risk there to attack the same leg higher. Does that make sense? So I don't know how everyone else trades, but this is just, I'm just trying to get into, I guess, explain what I look for and the type of setups I look for. But essentially, we'd be looking for that similar type of price action. So it's all the psychology behind it all. You're right there, Arthur. I mean, you might have different psychology, the way you like to attack it than I do. But I feel once we get those higher lows out of contraction, then generally that leads to a move higher. If I'm wrong, and it just pushes up to those highs, doesn't break through it, and starts rolling over, okay, then I'm wrong. But I know that from my statistics, 65%, thereabouts, 60 to 65% of the time, I've got a good trade. And it's just how early I can take advantage of that good trade or that leg higher. So AMA on the weekly, this is all that weekly, right? So we've got, you can see that price action is holding. This is on a weekly basis, so I'm going to look at it daily, but just starting off as reasons why on a weekly we're looking at it. So you can see that contraction on the week. We held the higher lows. We've got a higher low in here also, which led to a nice little, if you're buying it off a weekly basis, just technically, a good little push up on this candle, or even getting in the next day and getting in on that breakthrough here. Your stop could be down here, all right? But we got that high low and that push up through the highs. It was a bit extended at the time, but it did lead to a good little return there anyway. And that was just over 1-to-1. What I'm looking at now, so that's most recent price action here has taken out that high. So what we're looking for now, we've got contraction, we potentially got contraction. We're looking for that push back up. All right, so I've defined that's contraction. Now I want to see where is it going to come out of contraction and start pushing its way up to new highs. So if we go down to a daily, just to see what it looks like on a daily, let's just get rid of that. Well, let's just get rid of some of these. It's getting a bit confusing, isn't it? So that's your high. Let's not too worry too much about that. We've had that break through the high with this leg up here. We're contracting this leg. Okay, so every leg, don't forget, you got action, reaction. Generally, when we see reaction off a high, it's getting a bit extended up here. We've got reaction, it's heading south. And that's what we get. But this is the key level on that long-term weekly. We can push all the way down there, retest it, we don't know. But it's still holding that longer-term trend high. But we're looking for an area to get in, but it's coming into that sweet spot, which we said before. But at the moment, we're still holding lower highs. So I wouldn't jump in just yet because I don't know if this is going to roll over. The MAs are showing down. They're up on the weekly. They're down on this daily. So I want to see that start showing signs of the MAs to roll up. And then you've got them both in the same direction, weekly and daily. So my anchor chart might be weekly on this basis. I'm looking for my entry chart or my execution chart or trading chart on the daily. And I'm looking for my setup from the daily. Does that make sense there, guys? So really, with this type of price action, I want to see, even if we get this, and we start holding some higher lows and getting a bit of contraction here, and then potentially that's going to lead to a leg up. So maybe at this point the MAs they may have crossed slightly higher or they're flat, and we're looking for that breakout for maybe break out of this downtrend. At this stage we may have an entry. We could have an entry here. It just depends on whether it started to break out or we define our entry through that high there. Our risk is down here, and we're looking for at least targeting up to those 109 or even higher. So this one's on the radar purely because it's coming in that zone. The weekly looks good. It's holding an uptrend. Yeah, it's got to do with what price action plays out there, Paul. I wouldn't, like I said, that's what I'm looking for, a bit of contraction. If it's just going to pop up straight up from here, where I would find confirmation is probably way up through those highs. All right, and if it just holds, say if it just heads straight up there, but a lot of the time that can lead to, it can pop up, go all the way back down again, and I don't like that type of structure. But this candle here, just say, I don't even know where it is today. Let's just have a quick look. yeah, it's not doing much today. Still holding 98. So it's about here anyway, still around that 98 zone. So at the moment, that's the price action I'm looking for. So ideally, I would like this support zone to hold. All right. I'd like that support zone to hold and then start to hold some higher lows that I know this little down move, and potentially I've got this high low at $1. It could work out to be $1 if that starts holding a higher low off there and buy through $1. This is AMA, stock code AMA, which is AMA Group Limited. All right, so that's the price action I'm looking for, but it is in that sweet spot on that market there. Looks like the US dollar's getting pushed down again. So the next couple we've got, we'll just go through a couple more before we get into. I'll go through on the other charts. So another one that we're looking at, obviously, Culburra Minerals, and that's probably pretty clear that while we're looking at that one, we're starting from here. We had a good strong leg up. You know, we held higher lows. The key is way down here. I mean, that's right down at 22 on that weekly basis, that support zone, or even 25, say 22 and a half. It's produced this leg up. We're contracting that, and we're starting to hold some higher lows. So really, if we get up through 60, we could easily pop up through 60 here. To go back to the daily, that's where I think we're going to see a bit of action. All right, because we've held a higher low. That's confirmed. We've found that support around that 45. You know, it's touched down there once, pushed up to 60, come all the way back down, retested that support. That's starting to hold a major high low. That looks good. We get that push up through 60. That way, especially here, you can put your risk down around 50, and that's going to produce, because you'd expect, the presumption is once it gets through 60, that's going to, you know, we know what the weekly looks like. The weekly looks good. That weekly looks good. It's starting to hold a major weekly high low here, push up through 60, and then we could start attacking up towards 80. And that's the premise behind the trade. The stock code's right up here. If you can see that, Paul, it's very small, but I'll just try to go through. So this is PLS, Pilbara. Let's get the next one. AFY was one. Oh, it's actually not that great, to be honest, but just as a quick, it's a similar type of price action. You contracted in, we popped up, contracted in, and we're starting to see, this is AFY, Paul. It's called Afterpay Holdings Limited. Hasn't done a lot. It's not the biggest of ones, but we're looking for it to, that's holding a higher low. Now, if we get a pop up through 280, thereabouts, it's starting to hold a minor higher low. Pops up through here, that confirms that major high low at 230. So we're breaking out of that contraction down, if that makes sense. All right. And that's similar price action to what's happened in the past. You know, it contracts down and it just goes boom, contracting down, holding a high low compared to that 215 mark down here. High low up here at 230. That's it, 230. We've got early signs here, but that could, you know, pop up through the top side. And the weekly is starting to head up as well on the stochastic, so looking good. I just think it's a little bit stretched in the daily, so there's a few reasons why, but that's on there. That's one for the watch list as well. AJM, you can see why. Not to go too far, because it doesn't look too great here. It's this recent move up that looks good. Obviously, in the back of some solid news, you had a lot of chopping around between, say, 10 and 20. Washed out the top side, made that lower high, pushed down even lower, down to about 1 cent, and then built that higher low going into 2006, start of 2016, and just bang. You know, beginning of 2016, all the way up to 29. So just built some new highs. Not the high, all-time high, because I think it was, is that all? Yeah, not the all-time high, but anyway. All the way up, and with those sorts of moves up, don't forget, what was that, from about 2 to 3 cents up to 28. You've got to get steam taken out of that. I mean, I don't know why people can do it. They do it all the time. This is Culburra Mining Limited. That type of move up has been solid. It's near vertical at one stage. You know, these moves are getting towards vertical anyway. That's, to me, is just a bit of euphoria. It's a bit overextended, well overextended. And that's why we saw those lower highs. You're going to get profit taking. Remember, I would never buy it at that stage. But what we're seeing, so really you just have to sit back and wait. And we have traded this in the past, I think. I don't remember what we got on it. Let me just check it out. Not that. We got AJM. And we traded AJX. We haven't traded this one yet. Oh well. But the reason why we like this, you can see potentially we're seeing this sort of action, this most recent price action from September is holding some higher lows, and that's a key for us. And we just got that recent push up through towards 18, 17 and a half it got to, which took out these highs at 16 and a half. All right, so that's starting to show good signs of it's building. The buyers are stepping in, higher lows. It looks good. Holding higher lows, buyers are stepping in at higher prices. Sellers are starting to be weaker. And that would say after all that time, from way back April, it's close. Well, it's probably about 10 months, 8 months, 8 to 10 months. There's a lot of steam coming out of that market. So that for us is starting to look good. All right, so that's in a good sweet spot like we've described. And the weekly's starting to look all right. It's coming. It's not overextended either way, so it's got a lot of potential to the upside to at least attack that 28 level. All right, that's. I guess we'll call it quits there. Is there anything just quickly you want to look at? But I babbled on a fair bit there. So we got caught up with the price structure. Anyone want to talk further on price? Send some questions through to support at tradesetup.com.au, and just what would help? Maybe Paul, if you want to send through a chart, and where just pick out a chart, pick out something, or anyone pick out something, mark up what you think. If you're interested in looking at anchors and how to define them and where you define it, sometimes it's not hard. Sometimes it actually is quite hard. And just defining it, put them on a chart, send it through, and then we can always have a look at it. TNK. Let's take a look at that then. In at 228. Hey, you got in here, didn't you? Back here at 225, just in this pop up through here, I'm guessing. Yep. Now that's, look, one thing I've noticed with Clement, I think you're doing a great job, mate. I think these inside continuations, you can see this move up is great. The only thing, the way I'd view this, probably maybe not. Look, it's not too bad. It's gone from $1 to, yeah. Look, either way, you've had a move up, had a pullback, and then it's starting to build again. All this type of price action is building. So it's great. I really like these, and this is probably an ideal example of taking continuation type of pattern. So it's still holding. You can see this pullback down to 190, high, low, high, low, high, all these high lows. So you could have picked it in through here, potentially taken a breakout, and you can see that's confirmed our thesis, I guess, of why we look at it. It's broken through that 215 and pushed up, and you get that acceleration, that candle there. It's pulled back, retested it, so your stop is going to be around that 2. And the reason why I like these is because it gives you, it's pretty much, that's your entry, that's your exit down there. You can hold your risk below that high low, because if that's out, if you get tagged on your exit level, there's something wrong. For me, there's something wrong, and I'm happy just to sit back and assess it. And we're picking a market that generally holds higher lows. So that's a great little example of taking even an inside level as well through here, all these type of inside levels before it gets up to 240. All right, and just today, it's just popped up through 240. It's up 6%. So that's a cracker. And two, it gives you that chance. It's just held higher lows and just kept targeting. When this little pop up through here touched 240, it took out this lower high here at 235, but it's still below that high at 240, way back in mid-August. All right, so that's, oh God, I reckon it's nice. Buy on this one here, Paul. I wouldn't buy this one now, just now. I think these entries, well, let's draw it up. Let's just get a bigger chart. So we're just looking at this type of price action, all right? Actually, yeah. Now let's just go through here. Let's even just get rid of that, get a better chart. And we'll draw it up with our old faithful. All right, back to what I was looking at. So that's the high at 240. We've held high lows here. If you're looking at it this stage and you got that lower high, then you obviously, by theory, by definition, a lower high would lead to an attack of the higher low, which it broke through, and then we built this. So now I'm looking for, at this stage, if I was watching it from way back here, wouldn't buy it just yet. It's pushed up. I'm trying to define a higher low, which it just got here. For defining a higher low, then I'm looking for an entry. It's held that higher low. It's pushed up, retouched that, was it 215 up here? Still haven't got my entry. Still haven't got my entry. It's only really with that push up through that 215, but the whole time higher low, it started holding that higher low again. So initially, if it broke up at this stage, popped up through here at this stage, I've got to have my risk way down here. All right, below the higher low. Because that, my premise at this stage, if it popped up through here, would be that that's going to work its way up to target its highs and so on. But it didn't get through there. I could have taken that entry through here. It's just popped up through clear level, clear resistance level, holding higher lows. To me, the entry, the bias is up. The bias of this market's up. Your initial target is going to be up towards those highs, which it didn't get there at that stage. It's just come back down and retested, you know, that 215 zone. You could have had it. I mean, it's not really an entry just in this stage. It's more. Let's just take that off. It's more for me. Another entry is that I think it's pretty much where Clement got in. Yeah, we're in the past. So if I was following it from here, after extended, don't want to get involved here, like we said. So we've gone through these, and this is another entry here. So if we can just circle that in. So really my prime entries for these two here, even, no, let's just stick to the prime entries, and that break up through that level and a break up through that level. Does that make sense why? It's because we've got that retest. It's still holding higher lows, always holding higher lows. I'm looking for that inside entry here. If I've got in a bit late, I know there's a great one here, but I've missed that, retested. If you got in here, you're up, and your premise is still targeting that 240. In here, look, for me, there wasn't much of an entry just recently prior to today. Really, it's probably on that breakup through here. And the reason why, because you expect after all this pressure to the upside, buyers stepping in at higher prices, if I bought it today on a breakthrough 240, my exit would be, let's just draw that up, below here. Does that make sense there? So really for me on this price action, what we've just analyzed there, I've got 1, 2, potentially 3. I think this is a bit late to the game, but it's still a legit entry because I've got my defined risk below here, held higher lows. I know that if it does pop up through here and then I get washed out, I take a loss on it, I take a hit. So and it has to be after I entered. After it broke 240, I might have been 241 or 2 entry. If I get tagged on that, it goes to 243 or 4 or 5, and then rolls over and stops me out. There's something wrong. I don't like it because I know if on my premises this is going to continue. I've got in here, it's continuing. That's great. If it doesn't, then something's wrong. I've got this wrong. This is a daily here. Well, does that make sense there, guys? That was great work, Dave Clement. Anyway, like it, really like it. And these are what we call inside continuations. All right, continuation of that trend high, and you can see that type of price action is really, if you draw that a bit different, that's curving up, and that's what we like to see. Curving up means holding higher lows. If you get the chance to have an inside continuation, prime area is probably this one here. Even though it come under a little bit of pressure, not much, you probably still break even to positive at this stage. Then you get that curving up, that's a curve up, same type of price action. Those, that's my technical sound. All right. Does that look good, guys? Does that make a bit of sense? Kind of tad over time here, but I know we didn't get much chance to look at trades from yourselves. Tomorrow we'll just be doing that presentation around the 12:30. I'll put something together and then we'll look at something and just it'll be 10 to 15 minutes, and we'll be back on Thursday to do an extended presentation on different trades you're looking at. But so just get some charts ready. Like I said, Paul or anyone, Clement seems to have a grip on what we're discussing there. Anyone that's just is not really into the technicals but wants to learn a bit more, wants to understand more about anchors. It's everyone uses different terminology. I like to say anchors, but it's like a swing level. It's support, whatever. But how you define your trade, I think Nathan knows a bit about it too. So he's done, I think, a bit with Davin in the past and the guys. Am I right, Nathan? Am I just guessing? Or you don't even know me? I don't know you. But anyway, this is it's the type of style we're looking for. I mean, we're just looking for continuation. We're looking for continuation setups in essence, where we can define our risk. And that's what you want to do behind your trading. We're going to get tagged sometimes, but like I said, well, look, I'll get it up. I'll show you. This is how I keep my, you can see that there. This is how I keep my stats. So I know that my statistics, I've had 126 trades, say, over the last year or so. I'm around that 60% mark. I'm a bit below what I expect. My strike rate's still up there. It's still as long as it's above 50%. I don't know what we call the edge ratio, which means am I getting 2 to 1? Am I getting 1.5 to 1? Or am I getting 3 to 1? I don't know that. It's a bit too complicated on this spreadsheet anyway. But I know I'm getting around 60% at the moment, 60% right. And as long as I'm defining where I get out, and I can really lower my risk on the premise of the way I trade. I'm getting those higher lows, I'm getting that. I can really define my risk and minimize it as much as possible. And I'm getting in the right time. I time my trades fairly well. I know I'll get in the past, I've always got around 60 to 65%. I'm happy with that. Even if it was 1 to 1, don't care, making money. All right, does that make sense? But generally, as this comes down, it means that my edge ratio, I'm getting 2 to 1 on each trade, each winning trade, or maybe 3 to 1 on my winning trades, even better. So that tends to, you give up a bit on that because I'm letting trades go more. I'm letting them run a bit better. Does that make sense there, guys? If not, but either way, we're up. It's around 72%, and they're the gains they're all the trades with the different stats. But that's what I like to keep anyway. All right, we'll call it a day there, guys. I hope that was helpful. BAL. What's happening with BAL at the moment? Crap. Yeah, this one, it's well oversold, but there's no reason why when things are not looking good for a stock like that, they can just keep going. Yeah. Thanks, Paul. Thanks, Arthur. Thanks, Nathan. Thanks for joining in, guys. Any questions? Always great. I hope you're finding this informative. There's never going to be the be all and end all to trading. It's what I like to look at and what I've learned that works for me in the past. If it doesn't work for you, it doesn't matter. You just find something that works for you. It's all about your edge. It's all about finding your edge in the market and what suits you and the way you trade. If this doesn't suit you, it doesn't matter. It's all about making money and having a bit of fun, I guess. But it's about making money and finding consistency in the market. All right, and then and building and something that suits your trading style, and that's consistent. Then that's all you care about. If this doesn't work out consistent for you, don't do it. Simple. But it does for me, and I like that. I like the psychology behind it anyway. All right, I'm babbling on again. Thanks very much for joining us, guys, and we'll do that extended session on Thursday at 12:30. So join in there and get ready for some charts or something you want to look at. I'm just going to leave it open to talk about different trades. Even if you want to touch more on anchors and you just want to go through from start to finish of setting up a trade or setting up a chart of where you got your key levels and what would happen if they break and all that sort of stuff, just send in something you're having a bit of problems with. Send it in as a chart or just put it up as a code and we'll discuss it. Anyway, that's it for today. Thanks again, guys. We'll speak to you on Thursday. Ciao. Bye.